Hey everybody, Sive Morten here with the ForexPeaceArmy.com. Let's take a look now on the gold market. So, it might be sounding curiously, but despite that market has been slightly higher, the overall trading plan remains the same. The same patterns, mostly the same levels. The only thing that we could add to previous analysis is the possible upside targets. So, the point is that actually 36 is a major target on the weekly chart with a big butterfly. So currently, as market already passed with the minor butterfly targets, where to start watching for more extended targets. As we said, we could estimate here lots of different extensions, but butterfly seems more reliable here compared to the lots of different A, B, series patterns that we could estimate. So based on this suggestion, the next area of the target cluster, let's call it in this way, it will be starting from the 35.77 up to the 36.03. So this is 1618 extension of this butterfly, as we have here, and this is 127 extension of the big butterfly, which is actually a weekly butterfly as well. So that's what about the upside targets. Market has no barriers. We do not have fib resistances. We do not have overbought levels on not on any time frames. On the daily, weekly, monthly, everywhere market is not at overbought. So it could keep going higher. So recent up prediction, we see some signs of this demand for the safe haven just because gold is rising together with the dollar. So that reactions as a rule not very long lived. So maybe we could get some pullback, especially if you take a look at the intraday charts. We see that market stands at the next upside target with a minor butterfly. So here's how situation was developing. First, when we started our discussion here, market hits 127 extension. We said, well, take a look, maybe we will get some minor retracement. In this case, it might be the background for a double repo or bread and butter buy, as we call this momentum trade as well. So market will show some pullback. We do not want to see market below 34.30 area. So preferably it should stay above this support area that was previously resistance. And another one is a weekly upside border of the pennant, which is around 34. Now you can see this market moved higher. All levels also have moved slightly higher. Now this border coincides with the strong confidence support. That's great. But you can see that no chances for a pullback has been given, and actually market moves directly to the 1618 extension. So it means that now we stand with the same butterfly but on the different targets. So it means that here we are watching and looking for the same patterns. This is great thrust. By the way, on the daily chart, you could use directly this thrust, just because it's already 8 candles to the upside, which is minimum demanded amount of the candles for a Judd Napoli pattern. And we're watching for retracement. So if we will get the same 30% pullback, that will be the great opportunity to take the position. As you can see, mostly remains the same patterns, same actually trading scenarios. Levels are slightly changing just because the market set the new top. What else you could do? In fact, you could try to go with the upper direction, not waiting for his pullback, but that will be absolutely different story when you're trying to ride with the trend. It is a bit more risky because you have only the direction and only the condition that the actual market has no big resistances. That's what could inspire you. But at the same time, you do not have some kind of the real background, so some foundation in the way of the different patterns or something. You're just trying to take position on some minor retracement, hoping that the market just will keep going higher. So if you take a look at the hourly chart today, I do not see anything. The hand shorts that we suggested yesterday has not been formed. Market just keep going higher here. That's another sideways consolidation. So once market will show some minor pullback, maybe some set the new low somewhere inside of this range, you could try to take the position with the stops below these lows, hoping that market will just keep going higher to the 36. Your trade will be over if market will form lower standing lows, so you will be out in the stop order. That's another strategy that you could follow. Very often it works nice, especially market shows the great tendency, but it has its own disadvantages that I just explained. If you are not ready for this adventure, then probably better to not do anything. Sit on the hands, wait for the proper normal retracement, where we just take the position in much more comfortable situation. That actually towards what we have. Let's see what reaction market will show on this 35-44 target, and return back to discussion of the gold market tomorrow.